Live from the Jersey Shore to the world. Get up, get out, do something. Wake up with Jeremy Grunin. Take the show wherever you go. Download the free Radio Pup app for your smartphone or tablet. Join the conversation. 732-505-1160. News Talk Radio WOBM AM 1160 and 1310. Listen online at WOBMAM.com.
Hey, welcome back. Wake up with Jeremy Grunin. It is 7:08, Thursday, July 14th, 76 degrees. Get up to 88 today. WOBM AM 1160 and 1310. News Talk Radio. Streaming live on the Radio Pup app and WOBMAM.com. 722-505-1160. Join the conversation. We are now joined by our financial guru, Sean Monohan.
Morning, Jeremy.
In the studio. Good morning. Sean, I was just thinking about it. Since you started coming on the show, right, in the last, the last 2 months or so, right, the stock market has gone through the roof. I'm thinking it's you.
I think we planned it that way, right?
I think it's you. It is clear that you have had an impact on the markets in general. So I want to commend you.
You must have a lot of listeners.
It's what's happening. It's what's happening. Could you do me a favor? Just play with the microphone a little bit more.
Sorry.
So that'd be great. No, go ahead. Why don't you go ahead and do that?
Can you hear that? Does it come through?
It does every time.
Sorry.
That's all right. It's all good. I'm not.
I got to get on more regularly so I can have this adjusted before.
I understand because the microphone was a little lower because Rob Onifredi was on before. He's shorter than you.
Right.
He's a smaller guy. And even though he was talking mad trash about 13-year-old softball,
right, a lot of softball talk.
Yeah,
huh?
I mean it was wrong. I defended your honor, Sean, and I said that it was inappropriate, and I scolded him in the break.
I happen to be be this morning.
Yeah.
And so
it's good. So then I guess you know the truth, and we'll move along. So tell me, what is it that you think? Why have the markets? Why have we the last time you were on?
Right.
We were like, oh my God, Brexit.
Right.
Right.
It's amazing. So it was 2 weeks ago today.
Right.
And it was a week after the Brexit announcement, we saw in 2 days the market come down by 5%. And almost by the time that I was on, and certainly by the end of the week, it had made all that back.
Right.
So I think that, and I thought at the time it was a severe overreaction to a news story essentially that they all got wrong, all the surveys got wrong, everybody got wrong, and I think the one piece of news since then is that people realize that Brexit probably is a problem, but it's a long-term problem.
Sure.
It's not a today problem. It's not like people are going to stop buying stuff in England and buying our stuff and sending, traveling and all that. So it was overblown. So I think people realized it was overblown, and the markets, they came back from that and just haven't even stopped breathing. They just kept going. And at the same time, the 10-year treasuries and I know we're going to talk about this in a minute, but our bonds have become very appealing. There's been a flight to safety, and that has driven the bond yields down to the record low last week. So
that's an interesting point you bring up because it's kind of a two-pronged deal here. So step one is when there's upheaval somewhere else in the free world, the first reaction of all markets is, oh my God, what's going on? And there's a drop. Right. And then as things kind of as people start to see more clearly, if that upheaval didn't happen in America, then people say, well, where is it safe to put my money now? And they look here, and that actually helps our markets. No,
it does. It does. It's still, sometimes you look at the news, and if you flip through the paper, or in your case, look at the iPad or whatever it is you get all your news from, but you would think the sky's falling sometimes in this country. You think, oh my gosh, I can't believe we're, heading in this direction and so forth. But really, comparatively to the rest of the world, it's still the best deal in town. And when you look at our 10-year treasuries and say, man, they're only paying 1.34%, which means that if you bought that 10-year treasury, you would only get 1.34% return, which is, it's just a flight to safety. You wouldn't do it for any other reason. You don't do it to make money. And the other thing that's occurring is that nationwide or worldwide, we've got negative interest rates. So by far, the 1.34% looks fantastic, and it's driven the rates down. And there was a flight to safety that was a result of Brexit too.
Right. And we did get some good news today from England. Just in the last few minutes, actually, that the bank, that their central bank has kept interest rates unchanged. right? So can you tell people what does it mean if the Bank of England had lowered interest rates, what does that mean?
Well, when a central bank does that, whether it's the Federal Reserve or anywhere in the world, what they're trying to do, Japan, they're trying to spur the economy or change spending behavior, if you will, right? If you lower interest rates, you have less reason to put money into that vehicle, whatever it is, right? So in our case, in our country, when we had the recession, the rates were lowered. They've remained low, arguably whether they should or not, and what the increase would do to the stock market and all these other things. But they made cheap money. When people have cheap money, they're more likely to buy homes. They're more likely to buy cars. They're more likely to borrow money. So there's a whole set of things that occur, and that's sort of like the nutshell, if you will. But that's what the economy is trying to do. They're trying to spur spending and growth by manipulating the interest rates. If you will.
So the fact that they didn't lower them shows that there's confidence that the economy is going to be okay.
Correct.
And which is bad if you were buying a home, but good if you were in the rest of England saying, okay, well, that's good. That means that they feel like we're going to normalize and we're going to be okay.
Right. So, and here in the States, the debate's always about raising the interest rates from
Sure.
here, right? So we've punted on that for now. Actually, we raised them at the end of 2015. When you and I first started talking on the show, there was talk of another rate increase. That's been punted. They basically said they feel the economy's too soft right now, couldn't essentially handle that sort of it's not a shock, but it's a shock to the economy.
Right.
Because on the flip side, when you're raising rates, you are making things more expensive to buy for companies. Companies are financing things and so forth, and people, and it's going to slow things down, if you will. And people are very concerned on what that would do to the market. So the idea, though, is you do want to have long term. I mean, I think that you would look and say rates have to go up because you have to have, you can't keep them at near zero forever because you have to have bullets in the arsenal to fight the next battle.
Right. Although it becomes this weird. I look at it almost, topically as a drug, which is what can you get off of it now, right? How do you get off of it and wean yourself off of it, safely? And that's the tricky part because you raise interest rates and suddenly the number of things that you've tripped are just insane.
I think that's one of the things that came out of the recession. I think people feel, our Federal Reserve and our government, I think, held off or staved off a depression, okay, in 08 and 09. And I think they took a lot of steps. They saved companies. They manipulated these interest rates. They saved a lot of pain. But the question is, did they just kick the can down the road? Is this going to eventually come anyway? Is the question.
Right. Right. Good point. Okay. So when we come back, right, we're going to talk. I want to talk about negative interest rates because this is, you brought it up to me this morning that, I honestly I hadn't paid much attention to it, but we are seeing an unbelievable shift in bond offerings, and it's not here yet, but maybe we're gonna have to talk about whether it will be anytime soon. Our financial guru, Sean Monahan, Wake Up with Jeremy Grunin. We're back after this.
Get more Wake Up with Jeremy Grunin at our website, WOBMAM.com. News Talk Radio, WOBM AM 1160 and 1310. Connect with Jeremy, 732-505-1160. Wake Up with Jeremy Grunin. News Talk Radio, WOBM AM 1160, 1310, and WOBMAM.com.
All right, we are back with Sean Monahan, our financial guru. And so we're talking about negative interest rates, and you were talking about interest rates, and you're talking about, we have super low interest rates, and we want to steadily raise them. Meanwhile, in other parts of the world now, they're negative. How does that even work? What does that mean?
That means if you gave me $100, I would promise to give you 98 back.
That's awesome. What a deal!
And it's irrational to me. It's a flight to security. The one thing with bonds and to a bigger degree with cash, right? People always ask, is it bad to have cash? I've got cash on hand. But the good thing about cash right now is you will not make any money, but you will not lose money. If you had $10,000, you're never going to wake up one morning and have $9,999. It's always going to be $10,000. And there's value to that. and you can buy stuff with cash. So there's value to giving up investment return to have preservation. And what's going on, Germany just issued negative yielding bonds this week where they are literally promising you to give you less money back in 10 years than you have right now. So it's a flight to safety. People are scared of the other assets out there. They're scared of the stock market. They're scared of other things. Certain types of pension funds have to carry a certain amount of fixed income assets, and that's what's available. But they are basically disincenting you from, they're charging you to keep their money. Right? I don't know.
But does that seem, wait, so they're charging you to keep their money. So they're offering you, if they offer you a negative interest rate bond. So
right.
Isn't that saying to me that our economy is going to fail on some level? We're going to go backwards.
It's also
right?
saying, I don't really want your money.
Is that what you think it's saying? Or you think it's saying, we know we're going to lose over the next 10 years? What is it?
No, it's an intentional way to try to basically to get people to put their money elsewhere.
Gotcha.
I think.
That's crazy.
But as an investor, when you're looking around, if I was a German right now and I was saying, well, I've got X amount of money that I want to keep safe and grow a little bit, and don't want to preserve it more than grow it, I don't understand how you could look at a German bond and say that's a good idea. But it's also the reason ours are 1.34. And I think if I walked in and said, hey, 10 years at 1.34, it's up a little bit since this week because they pulled back a little bit. But you would say, well, who's really putting money in that? Who's really investing in that? And the reality is it's safe money. It's a flight to safety. They think the stock market holds more risk than these bonds. And they're okay with that small return. And it's still, compared to Germany or Japan or some of these other places, it's still the best deal in town.
Right.
And it becomes a self-fulfilling prophecy because that people plow money into it. When they plow money into it, the yields, they go down.
So you made a very interesting point there, though, and I don't want to let this go now because it was a little bit of a revelation to me.
Okay.
You said, if I was German. Now, I'm not going to lie. I thought Sean Monahan was a German name all this time. You're telling me it's not. It may be Irish, I guess.
It is Irish.
Right.
I am actually 50-50 Irish.
Wait, what do you mean 50-50 Irish?
It means on my mom's side, my grandfather was German and my grandmother was Irish, 100%, and then flipped on my dad's side where my grandmother was 100% German and my grandfather was.
So you are. So when you say, if I was German, you actually are German.
I am. I was referring to somebody in Germany, though.
If I was in
Germany, if I was a German investor.
If I was in Germany German. I get it. My bad. So that was I guess I got fixated on the whole if I was a German. Like if I was a rich man.
Well, that's where they just issued the bonds.
Yeah, I got it. I was just really. Anyway, when we come back, right, I want to talk about investor behavior because it's I think it's important to note, and we talk about it a lot, but I think we want to stress it again here because just like we talk about it when the market drops, right, and we talk about being showing discipline. It's actually probably more important to show discipline when the market is on the way up, right?
That's right.
So our financial guru, Sean Monahan, we're going to talk investor discipline. I think we have Hometown View today. Do we still have Hometown View?
Yes, we do.
Yeah, we do. We still have Kevin Williams' Hometown View. Coming up next, and then the news, and then we're back. Wake up with Jeremy Grunin. Hang out.
Wake up with Jeremy Grunin. News Talk Radio WOBM AM 1160 and 1310. Live from the Bob Levy Broadcast Center, overlooking the Toms River, it's time to get up, get out, do something. Wake up with Jeremy Grunin. Be a part of the show, 732-505-1160. News Talk Radio WOBM AM 1160 and 1310. Listen online at WOBMAM.com.
Hey, welcome back. Wake up with Jeremy Grunin. We have a caller on the line, so good morning.
Good morning, Jeremy.
Hey, what's going on?
Everything's great here in Toms River.
Beautiful day, hazy, hot, and humid. I love it.
Absolutely, it is. What can we do for you this morning?
I just wanted to recognize a neighbor of mine. We live in Shelter Cove. His name is Bill Weigel, and he's a volunteer, retired volunteer for ARMS, which stands for American Recreational Military Services. And he goes around the entire state of New Jersey and collects perishable goods that are shipped overseas to our military in Iraq, Afghanistan, anywhere where our military is protecting us, keep us safe and free.
Well,
the biggest issue they have, and they work out of the Toms River Armory, they need funding for mailing. It's not a question of goods. It's the question of getting money to send these packages overseas, which is very expensive. So I know that they're participating in your salary giveaway, which was very, very noble of you. I didn't know you made so much money, Jeremy. It's a lot of money, man. And so if everybody could give them a shout-out to Bill Weigel and ARMS out of the Toms River Armory, I'd appreciate you guys supporting them. They go way above and beyond what anybody would do on a daily basis to help our military. And they really appreciate the packages that we send them.
Absolutely.
I also want to give a shout out to my daughter Alyssa, or our daughter Alyssa Calabrese, who's getting married to Mitch Rashawn this weekend, and it's going to be one hell of a party up in Nina's in the park in Belleville, New Jersey. So if you're in the neighborhood, if you're not hanging at the Jersey Shore this weekend, which I'm sure you will be, stop by and say hello.
Awesome. Well, congratulations.
Thank you, Jeremy. And lastly, I like to commend. I'm a new member of the Greater Toms River Chamber of Commerce, and I can't tell you what a fabulous organization they have, and I know that you are also a part of it. And I want to just say congratulations to Nicole and Dominic for their being newlyweds. And I can't tell you what a great staff with Danielle and Jenna. Those two women really work their butts off to make sure that the chamber is successful.
Awesome. Well, thank you so much for the kind words. And Noel and Dominic got married last week, so we have a new CEO of the Toms River Chamber. Used to be Noel Latano, and now we have Noel Carino. So at least we kept it Italian. So that's all That's all we could hope, right?
Well, from a Carlo Calabrese here, it's all good. Keep it in the family.
Absolutely.
And Jeremy, thank you. I love your station. You're great, man. I'm on 195 going west to Princeton right now. I do this right every day, and you get me through the ride.
Awesome, man. Thank you so much for the call. Drive safe, okay? And have fun this weekend.
Be well. Make sure everybody looks up ARMS.
We will.
American Recreational Military Services out of the Toms River Armory.
Thank you so much. Have a great day. All right. And I might as well just finish that up by saying if you go to WOBMAM.com, you can vote for the charity of your choice. We have a number of them up there right now, and we are looking at currently just about 3,000 votes. Look, we're voting through Sunday, so there's a lot of time to support a great cause like ARMS or like one of the other great nonprofits on there. So, turning our attention because, in order to give money to great organizations like ARMS, you have to earn money, right? So we were talking, Sean Monohan, our financial guru, about investor behavior. So talk to us a little about the discipline necessary when the market is on the uptick. Right.
I think I always, I study the investor behavior. I find it fascinating. And I use the quote, I think it was JFK, you want to fix your roof when the sun's shining. So right now we've got a market that's appreciated in value, and it's a good time to evaluate what you're doing. But typically in this country, and probably most countries, investors make the wrong decision at the wrong time often. They make emotional decisions. They feel comfortable when the markets are up like this. They look at the newspaper. They say, we're got a few more jobs. Things don't seem that bad. The markets are up. And again, it's the polar opposite of when I was in here 2 weeks ago when people were, if you turn on the news that Monday, you would have thought, how is this U.S. economy going to recover from Brexit? How is this ever going to turn right? Because for a Friday and a Monday, you had nothing but negative stories. And that does have an impact on investor behavior. One of the things we look at, it's interesting. The American Association of Individual Investors tracks whether people feel bullish or bearish, and it's a contrarian indicator. And like in February 11th, for instance, they had 19% of investors were bullish. That was the low of the market this year. The markets are corrected by 10%, and then that doubled by the end of June. So the markets came up. Everybody feels bullish, but the reality is, you want to make decisions based on, if you were just to say when's a better time to invest, it's a better time to invest when the markets are down 10%.
Right.
So it's but people don't do that. They do the exact opposite all the time, and they make emotional decisions. So a lot of what we do is talk to folks about, their emotions and try to come up with a strategy, an allocation strategy or whatever, and make investments not based on the news, emotions, and so forth. And this is a great time to be having that conversation with your advisor.
Very good, and I agree with you. And that's kind of what you do, right? I mean, that's why a lot of people think they can kind of do it on their own, just like they think they could. They could do a personal trainer. They can do that. They can get healthy on their own and get physically fit on their own. Trainer helps keep you on the right path and keep you disciplined to what you're doing, just like a financial advisor helps you keep disciplined and keep on the right path of what you're doing, right?
That's right. I think, I don't have magic potion, and I know what I control and what I don't control. I control how an investor is allocated, how we deploy assets and make decisions. I don't control the markets. I don't control Brexit. I don't control the negative interest rates. This stuff's all beyond my control. The only thing we can do is try to set up a portfolio that will, preserve people's assets and over time grow them. And that's regardless of what the markets are doing. I don't try to guess what's next. And I think it's a dangerous game to do it. And the reason is because most people do it wrong.
Sure.
They look at they all left the market. There was a flight to safety surrounding Brexit. The mutual fund flows is another statistic people look at. There was $14 billion that flowed into bond funds at a time when only $275 million went into equity funds. So and that's what caused us, the demand to increase. The prices appreciated in bonds and the yields went down. But it's also a contrarian indicator.
Right. Sean Monohan, our financial guru, can you tell folks where they could find you, where they could look you up, how they could get in touch with you, how they can make you their financial guru?
My phone number is 609-698-3800 or 693-3800. And then oh my gosh. And my email address is Sean, S-E-A-N, spelled the correct way, the Irish way, S-E-A-N at finalt.com. And that's also my website, FIN, short for Financial Alternatives, finalt.com.
Sean, is that the Irish way or the German way? I just want to, because
it
seems like a 50-50 proposition here.
Yeah, no, the name got the Irish side. But
Gotcha. Sean, as always, thank you so much for your knowledge, for your impact, for your words of wisdom for our listener friends. Wake Up with Jeremy Grunin.
All right, have a great day, Jeremy.
Back right after this.
Stay tuned for Preferred Company with Joel Markell and Marianne Levy at 8. Wake Up with Jeremy Grunin continues next. News Talk Radio WOBM AM 1160 and 1310.